You're watching the Daily Market Comment here at XM.com by Mario Sajikiriakos. I'm Christina Marujos. 1 week to go until the U.S. election, and markets are starting to wake up to the storm of risks that is threatening to send the economic recovery into reverse as another wave of infections rampages through Europe and America. Meanwhile, the U.S. election is becoming an increasingly competitive race. The contest for the Senate in particular is almost too close to call, dimming the prospect of a sweeping Democratic victory that could deliver gigantic stimulus packages. A split Congress would imply a continuation of political gridlock, with the greatest fear being that fiscal discipline could return as a theme next year. While President Trump is still far behind overall, he has closed the gap enough in some battleground states to have an outside shot. All this was enough for markets to push the risk-off button on Monday, with the S&P 500 sinking by 1.9% as investors reduced their risk profile, rotating into the safety of bonds instead. The risk aversion was felt in the currency arena as well. The dollar and the Japanese yen naturally climbed as the mood soured, whereas the commodity-linked currencies were hit the hardest, though none of these moves was especially large. One of the biggest oddities lately is how well the euro has held up, even as the outlook for the euro area grows darker by the day. Meanwhile, the bloc's core inflation rate hit a record low in September, well before infections exploded, amplifying the threat of outright deflation and putting even greater pressure on the ECB to increase its liquidity offerings soon. Despite all this, the euro has barely retreated, and speculative positioning on the currency remains near record-long levels. So what gives? One explanation is that there is no real alternative for the euro to depreciate against. The dollar is being plagued both by election and stimulus risks, the pound must deal with all the Brexit turbulence, the SNB is constantly intervening to weaken the franc, and the emerging markets are riskier than ever. The yen is perhaps the only option that remains. This was today's Daily Market Comment. Thanks for watching at XM.com.